Have you checked around you recently? Excitement is in the air. The crypto market started on a good note this year. It started green, although we're not sure if it will end green. Should we enjoy the moment? Yes, we should. Not everything about the crypto market brings smiles to our faces. There's been a mix of disheartening and enthralling stories. This is a good time, but many investors are afraid to invest, not to talk of going all in. This is a good point to ask the question, what are you afraid of about crypto? Well, we all know these things. At the start of 2022, an interesting moment for most crypto investors, the Super Bowl featuring celebrities like Tom Brady, Larry David, and Matt Damon in commercials for crypto companies. Logos for crypto companies like FTX were seen plastered on multiple sports arenas, and a new wave of crypto influencers emerged, pulling hundreds of thousands of followers. Cryptocurrency was everywhere. Soon enough, there was a crash. This crash brought headaches, fear, and anger among millions of people around the world who invested their savings and were left wondering whether they'd ever see their money again. David Yaffe-Balani, a New York Times reporter who covers crypto, said crypto kind of rose at the 2008 financial crisis. That whole catastrophe was an example of the failures of the centralized financial system, and it helped inspire this movement to create a parallel financial system that didn't rely on the types of institutions whose bad behavior had caused a lot of people to suffer. The crash shook the entire industry, and multiple companies, including Celsius Network, filed for bankruptcy. The reporter added, what the crash did was prompt a kind of run on the bank. People panicked. They thought that their cryptocurrencies were in danger, and they moved to withdraw everything that they had deposited in Celsius. And that's what kind of exposed the kind of shaky foundations of the whole company. Down the year, the crypto market rolled into a mess. In early November, FTX filed for bankruptcy after a series of events exposed a multi-billion-dollar hole in the company's balance sheet. A little over a month later, the FTX CEO Sam Bankman-Fried was charged in federal court with 8 counts of fraud. The series of high-profile collapses in the crypto industry prompted calls for more regulation from the federal government last year. In an interview, Gary Gensler, the chair of the U.S. Securities and Exchange Commission, said that he was willing to work more with the CFTC to protect consumers from shady crypto investments. At the same time, he warned consumers to think hard before they invest their money in crypto. Don't get caught up in the FOMO, but you're also at risk of a field where the business model is taking your assets and commingling them, often in ways that are not allowed by our current laws, he said. However, many consider the regulations too extreme. On September 27, 2023, the House Financial Services Committee held a hearing titled Oversight of the Securities and Exchange Commission with SEC Chair Gary Gensler as the sole witness. In the last SEC oversight hearing in Congress back in April, Chairman Patrick McHenry had a contentious back and forth with Gensler with questions over the status of Ether as either a security or a commodity. This hearing saw a repeat of the wrangling back and forth of questions about Bitcoin. Both times, Chair McHenry chose the questions to be the very first ones asked during the hearing. It appeared that the top 2 digital assets by market size, Bitcoin and Ether, were still creating dismay for policymakers as to the right regulatory approach. More importantly, the question of whether action by Congress is needed to help provide a regulatory paradigm that consumers, investors, and businesses can rely upon when it comes to digital assets. For Bitcoin, Gensler answered, I would say it's not a security, and then that the test is otherwise for other laws. For Ether, Gensler's answer was, I'm not going to speak about any specific one, and that is based on the facts and circumstances of each cryptocurrency token. As 2024 began, Bitcoin stood at $42,665, fueling the market with optimism. A mix of influential factors suggests a potential supercycle is underway. Nevertheless, don't blame investors if they're too scared of the past to put their money into crypto again. Regardless of this alarming sentiment, one of the primary drivers of this potential supercycle is the halving event scheduled for April of 2024. According to historical records, halving events, which reduce the reward for mining new blocks and therefore the rate at which new Bitcoin is generated, have been associated with significant scales in Bitcoin's value. This reduction in supply, connected with a steady or increasing demand, is leading to a supply crunch. As a result, there may not be enough Bitcoin available for purchase, which would drive the price higher to incentivize long-term holders to sell. Also, historical data shows that Bitcoin's price has risen after each halving event, although not immediately. For example, following the 2012 halving, Bitcoin's price rose from $12 to over $1,000 within a year. Comparable patterns were observed after the 2016-2020 halvings, with significant price increases occurring months after the event. The upcoming halving this year will further reduce the block reward for 6.25 Bitcoin to 3.125 Bitcoin, potentially increasing Bitcoin's price as the supply of new Bitcoin slows down. This pattern implies a strong correlation between the halving events and the long-term price appreciation of Bitcoin. Perhaps in an attempt to assure investors, several analysts have made bullish predictions for Bitcoin's price in the next bull market. Renowned Bitcoin analyst Plan B predicted a potential all-time high for $524,000 for Bitcoin in the next 4 years, while the analysts at Blockware Solutions suggested that the 2024 Bitcoin halving could propel the price to a staggering $400,000. Global investment fund Van Eck was not left out to make predictions, as it has for 2024, suggesting that Bitcoin could reach new all-time highs as soon as Q4 of 2024. This prediction is driven by factors such as the US election, the supply shock caused by the halving, and regulatory shifts that can make the crypto commodity as easy to own and account for as a regular stock. The final cryptocurrency prediction for 2024 gives us chills, as it explains that we will witness another game-changing failure. The euphoria is indeed high, but there is a need to be careful. As noted in previous videos, in 2022, the Terra Classic and Terra Classic USD were the disasters of the crypto world. In May of 2022, Terra Classic USD was the fourth largest stablecoin by market capitalization, with Terra Classic being the fourth biggest digital currency by market capitalization. However, things unraveled quickly. Unlike most stablecoins, which use fiat currencies to maintain their peg to the US dollar, Terra Classic USD relied on an algorithm. A large group of sellers in USTC decoupled this peg, which resulted in an opportunity that ultimately led to a cascade effect in Terra's stablecoin and in Terra itself. Not long after this epic collapse, we bore witness to the fraud that occurred in the cryptocurrency exchange platform FTX. Now, it is reasonable to conclude that the crypto market lacks adequate oversight and has historically been a stomping ground for manipulation, which is precisely why the SEC has been skeptical about approving a Bitcoin ETF. Now, let's face the hard truth. For example, the SEC charged Coinbase Global and Kraken for operating as unregistered securities in 2023. These lawsuits threaten the core operations of both businesses, which could result in hefty fines and threaten the future growth or viability of both companies. Yes, we are expecting pretty gains this year, but we must not be caught up in the excitement and forget the basic principles of making crypto investments. Don't invest the money that you cannot afford to lose, and don't put all your eggs in one basket. You love it or loathe it, there is no guarantee that a crypto project you invest in will succeed. Competition is fierce among thousands of blockchain projects, and many projects are no more than scams. Only a small percentage of cryptocurrency projects will ultimately flourish. Then regulators may also crack down on the entire crypto industry, especially if governments view cryptocurrencies as a threat rather than an innovative technology. Despite the risks, cryptocurrencies in the blockchain industry is growing stronger. Much needed financial infrastructure is being built, and investors are increasingly able to access institutional-grade custody services. Plus, professional and individual investors are gradually receiving the tools they need to manage and safeguard the crypto assets. Although other factors still affect the riskiness of crypto, the increasing pace of adoption is a sign of a maturing industry. Individual investors and companies are seeking to gain direct exposure to cryptocurrency, considering it safe enough to invest large sums of money. Many cryptocurrencies such as Bitcoin and Ethereum are launched with lofty objectives, which may be achieved over a long time horizon. While the success of any cryptocurrency project is not assured, early investors in the crypto project that reach its goals can be richly rewarded over the long term. This year, we'll have an impressive ride, folks, but there's still long-term benefits to be unlocked. You need to be assured of the long term if you decide to go all in on Bitcoin. But that's going to do it for today's video. Make sure you click the subscribe and notification buttons, and we'll see you in the next video.